on TV, online and on your smartphone. This is Ticker News.
This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Hi, I'm Chris Judd and this is Talk Your Book, and today we're really lucky to be joined by Luke Laretive from Seneca Financial Solutions for the first time. Luke, thanks very much for coming on the show.
Pleasure, Chris.
Now, maybe before we get into your stock pick, if you can tell us a bit about Seneca Financial Solutions and what your guys' business model is.
Yeah, sure. We're a little bit different to maybe some of the other fund managers out there. Whilst we do run sort of two, ASX-focused funds, large cap SMA focused on the ASX 200, and then a small cap fund focused on the wholesale market. We're also sort of an advice business and a stockbroking business as well. So people can actually, come to us, get holistic advice and also sort of do everything they need in kind of one place. And
we've got to open up a chance for a humble brag about your small cap fund that launched a bit over a year ago, which has just shot the lights out. Tell us a bit about how that's tracking and what type of stocks you guys look to invest in.
Yeah, sure. We've been really lucky and worked really hard to generate 28.4% returns over the last 12 months to 30 September. It's fantastic to have a great year and kick off well for the sort of initial investors. But certainly, a year doesn't make a great fund manager, as you're well truly aware. So,
certainly better than being down 20 in your first year.
It's definitely better than that, mate. It's definitely better than that. But we're looking forward to trying to, I suppose, continue that, to emulate that and grow further. So, hopefully we can keep it up.
And what stock did you want to talk about today?
I'm going to talk about a relatively new stock in our portfolio, which is Wildcat Resources, code for that's WC8. It's a lithium developer explorer out in Western Australia.
So before we get into the particulars about Wildcat, why don't you start with a top-down view of the lithium market, which has been a pretty wild ride in the last few years.
Tell me about it.
And how you're viewing that.
Look, I'm a long-term lithium bull. I think this is one of the few opportunities in a commodity market where you're seeing a structural shift in consumer demand. And whether that is a short-term boom or bust in EVs, whether that is a Tesla price at all-time highs or 24-month lows, I think the overall trend is just to emit less carbon, is to use batteries more, and to do that you're going to need a lot of lithium, and you're going to need a lot more lithium than you currently have available in the seaborne market. So, from our view, that's a pretty good tailwind. It's really a question of how that cost curve develops over time, and really who are the winners and losers from the current market caps.
And talk to us about the company history of Wildcat.
Yeah, it's a pretty interesting one actually. It was acquired for only $6.5 million, and given it's a $440 million market cap today, that's a pretty good buy.
Yeah.
As a portfolio, one of the companies that was part of GAM's initial portfolio in the Pilbara. So Tabba, which is the Wildcat project, was sort of number 4, I suppose, and then there was Pilgangoora, which is what Pilbara own now. There was the Wodgina asset, which is owned by MinRes, and there was IGO part owned the Greenbushes asset. So they were the 4 assets that were part of this portfolio, and obviously Tabba is the last one that's sort of undeveloped.
And Tabba's actually been mined before for tantalum, I believe.
Yeah, it's been mined before for a relatively short period of time, and the tantalum has been a pretty good predictor, I suppose, of lithium for these other players in the region. Geology is kind of similar, and it's kind of been the way that this Pilbara lithium story has really been sort of blown out.
Which means it's not a granted mining lease. And how are you sort of viewing permitting risk on a project like this compared to some other projects?
Look, I think that granted mining lease is significantly undervalued and underappreciated by the market. It's going to mean they're going to be in production, in my view, 2 or 3 years earlier than, say, Azure, which was taken out at a 1.7 bill market cap by Gina Reinhardt and Hancock Prospecting. So from my perspective, that mining lease gives it a significant advantage and gives it really, high strategic appeal.
And maiden resource estimate due in the December quarter this year, is that correct? And is that sort of the largest re-rate opportunity you can see near term?
I think what's more, yes, it is. You are right. It's going to be out before Christmas or going to plan. I think it's not so much that you would buy it for the re-rate on the resource. I think the resource is sort of known. I think anyone with half a brain can kind of thumbsuck what it's going to be. What's more relevant, I suppose, is that mining companies, larger mining companies, love buying stuff where they can put an in-ground value to a management team and a board and say, hey, this is a JORC compliant resource. We're not taking any risk here. we can buy this. So I think the strategic angle, which I think this company does get taken out in the next 6-12 months, is really the interesting thing about a resource coming to the table in the next 3 or 4 months.
And in terms of what those major mining companies would be looking at and the quality of this resource, what is it about this resource that makes it potentially low-cost operation and an attractive, an attractive takeover target?
Yeah, if you think about what Pilbara are doing, sort of 50 k's down the road, they've got these stacked pegmatites. There might be 6, 7, 8 of these in the central pit, up to 10 in the east pit, and every pegmatite is, a little sort of tube like that, for lack of a better word, and it's got 2 contacts with the waste material, the basalt. And Pilbara's done really well to invest a lot of money, time and expertise and technical know-how in developing ore sorters to be able to maximise recoveries for those contact zones between the basalt and the pegmatite. This deposit at Tabba Tabba is just thick. It's like 60, 80 metres thick, 2.2 kilometre strike, pretty shallow, down dipping sort of thing. So they're only going to have 2, maybe 4 contact zones, which means not much waste product, much better recoveries. And while the head grade you might be in your drill core might be a little bit lower than what others have seen, I think your run of mine grade is going to be right up there. I mean, Pilgangoora is operating at a leading spodumene sort of cost curve mine at $440 a tonne, and I don't see why these guys couldn't do something similar or maybe even be better.
And what sort of strip ratio could you see on a project like this? Look,
I don't think it's going to be that high. I think the easiest thing to do is just look at what the neighbours are doing, and kind of just copy and take your lead from there. If they spend 250, 350, 450 million building this thing, I think it's going to be a very competitive cost mine.
And we talk about jurisdiction a bit. Jurisdiction in Australia, obviously WA, very mining friendly jurisdiction, but really close to Port Hedland as well. Maybe talk to the significance of that and what that does for transport costs.
Yeah, I mean, transport, because you're mining a relatively high value material, it's not as much of a big deal, but as in other commodities, but certainly does add to your cost base, and certainly being only 80 k's from Port Hedland and kind of on the way for Pilbara, coming up from the south, I think makes it a really natural fit for what they're trying to do, and I see them as the natural acquirer of this business, and the value is certainly there at 500 mil market cap.
And talk to us a little bit about the team.
Look, I was really impressed. Ben and I spent some time up there this month, just gone, and I was, a bit of a sceptic on Wildcat, to be fair, before I went. A lot of hype around it early, had a big share price run up, was, over $1 billion market cap.
Put together by Matty Banks originally,
yeah.
Ex-AFL footballer, so good to see the footy players keeping involved in markets. Yeah,
for sure. But I went up there and, Matt was a really impressive guy.
Yeah.
Certainly no slouch in terms of his understanding of the project and what they're trying to do. He's put together an amazing team of people, and I think it's a team of people that we can kind of track through the industry and have sort of researched, I suppose, among our network, and they've all just got rave reviews, which is pretty rare. It's pretty rare to find someone who's had a career for 10 or 15 years and everyone you talk to about them just says, yeah, absolute gun, A-grader, would have him on my team any day of the week. So,
because he sounds like Matt he's regarded as a good financier or entrepreneur in mining over there, particularly in small caps. But
definitely is,
probably the technical nous he's put around him is really, really highly regarded.
Tyron, the exploration manager there, was just, I've never seen someone so passionate about the work that they're doing. And it's work that you're doing in 45-degree heat, trudging around in essentially you just imagine the Pilbara. Like it's not nice work. It's not sitting in the aircon office. Chris, I'll give you the hot tips.
We can't afford aircon at Sarah. It must be nice if you can, I guess.
But you know what I mean. It's hard work, but he's just so passionate about it, so interested in what he's doing, so keen to show people around, and I think that enthusiasm is just infectious, and it brings better people to the project, and you end up attracting talent that maybe you otherwise couldn't. So they've definitely really impressed me.
And so you touched on potential capex, maybe in that $300 million range. Is
I think up to 5 if you want to price it there, which in this this will spit out a nice MPV if that's the way it ends up going.
And what's their current cash levels?
They had 77 mil. They're down to about 69 mil, I think, now at the last sort of announcement. So plenty of cash in the till. They did a really good raise when the share price was high, which is again smart from sort of Banksy and the guys there. It's good to get that money in the till, and they've got plenty of money to sort of do what they need to do now for the next foreseeable future, really.
And valuation-wise, how does it compare to sort of a Patriot Battery Metals, which this sometimes gets compared to, or maybe an Azure, which was obviously a pretty attractive exit?
Yeah, for me, I think this is just cheap. Like, you know, if you're looking at those sort of metrics, I think the mining lease tips it over the edge for me. I think if you're looking at James Bay and Canadian lithium, I don't know what the licensing, permitting, infrastructure requirements are going to be up there. You know, it might be difficult. It might not be, but there's potential for it. It's certainly not going to be difficult in the central Pilbara. So it definitely is de-risked from that perspective, and certainly, you know, at this sort of market cap, it's going to offer amazing and attractive value for shareholders, but also for potential strategic acquirers.
Compelling story, very well presented, mate. Thanks very much for coming on the show.
My pleasure, mate. Appreciate the opportunity.
And thanks for watching Talkie Book. We'll be back to do it all again in a couple of weeks' time.
You're watching Ticker. We'll have more in just a few minutes.